This simple yet effective scalping strategy works every single day, and it doesn't rely on any useless indicators or outdated concepts like support and resistance. It's completely rule-based, and all you need to do is follow a 3-step checklist before entering a trade. In this video, I'm going to be explaining exactly how you can trade this system, and I'm going to prove that the strategy is consistently profitable by showing you real trade examples, doing a live broker login, and showing you guys a full backtest. First, the proof. This is my live account over the last 30 days. You can see I have a profit of $125,000, winning 80% of my trades. I target on average a 1-to-3 or a 1-to-4 risk to reward ratio. This was not luck. This was the result of me applying a simple mechanical strategy over and over again. Now I'm going to teach you this exact strategy. My entire trading strategy is built on one core concept: trading at key liquidity levels. These levels are simply the untested levels, meaning levels that have not yet been hit, of the New York, London, and Asia trading session. I'll pop up a little overlay of exactly when these sessions start and stop so you know. These are major areas of liquidity, meaning areas where there's lots of order, so when price hits one of these areas, it's gonna have a big reaction. The reason it's important that we trade around these areas is because these areas are what allow us to catch these good risk to reward trades where we're risking a little bit of money and making a lot of money back. There's a reason that these levels are so important. A former Goldman Sachs trader, often called the godfather of institutional order flow, famously explained that banks don't look at charts the way that we do. They simply look at where the most orders are clustered. And where are the most orders? Above yesterday's high, where breakout traders have their buys, and below yesterday's low, where long traders have their stop losses. I want you to think about the market like an auction. We are constantly moving between different areas, and some people are very interested in certain prices and some people are not very interested in certain prices. Levels represent prices. These levels are massive pools of liquidity. The banks know this, and they engineer moves to these levels to trigger those orders and to fill their own large positions. Our job is not to fight the banks, it's to trade with them instead of against them. We do this with a very powerful setup that I call the break and retest. Let's hop on the chart so I can show you exactly how this setup works in real time. The first thing that we are going to do is take this rectangle tool on TradingView right here, or for you it might be right here, and then we are going to go ahead and we are going to highlight the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, just like this. After you mark out this rectangle, I want you to double-click this rectangle and then make sure this midline is checked. This is very important, guys. You cannot trade this strategy if you don't have this midline checked, and I'll explain why in a second. This midline is where we place our entry. The reason we place our entry at this midpoint is because you'll see that we're actually able to get really nice confirmation of what price will do when it interacts with this midpoint. And it allows us to place our stop loss slightly below this zone, leaving room for a potential liquidity grab, which again, you will see later in the video why this exact placement is so useful. Now there's 3 components of the break and retest, and this is an incredibly simple setup, but you have to follow along to make sure that you understand everything. First component is the break, right? This simply means that we are breaking out to the upside, just like this. Now, the important part of the break is the break tells us what kind of trade we are taking. If we're breaking out to the upside, we are expecting to take longs when price retests the midpoint. Test simply means touch. As traders, we like to use a lot of weird fancy words, but all the test means is touch. So then as price retests this midpoint, we're expecting it to continue moving in the same direction that it broke out to, which in this case was the upside. Now let's go ahead and let this trade play out. Boom, we got the retest. So the key thing here, guys, the reason I'm showing you this is because look how perfectly we bounced off of that midpoint. The reason we're placing our entry at the midpoint and not at the top of the zone or the bottom is because 1, it allows us to catch these beautiful reactions, and 2, it gives us some wiggle room with our stop loss. I saw some people in my Instagram comments that were like, oh, I got stopped out because they entered at the top of the zone. They did not pay attention and listen to me when I tell them to enter at the midpoint of the zone. So this trade ended up giving us a beautiful 1-to-2 risk to reward ratio. I usually like to target a 1-to-3, but the market was pretty choppy this morning, so I was okay with a 1-to-2. All right, everybody, so this is our next example. So we can clearly see that the break is happening to the upside, meaning we are looking for a retest of the midpoint to take our longs, targeting a 1-to-4 risk to reward ratio, and our stop loss on this trade is 5.5 points. Let's hit play and let's see if this trade works out how we want it to. Boom, we are in the trade, and boom, we caught a 1-to-4 risk to reward ratio on that specific trade. I made around $11,000. Next example, so as you can see, we have the first 15-minute candle marked out from 8 to 8:15 a.m. Eastern Standard Time. In this example, price is breaking out to the downside, so we are looking for some shorts 5-point stop loss, targeting a 1 to 3. Let's see how this trade plays out. Boom, we got stopped out, and on that trade, I lost $3,000. Just keeping it real with you all. This is the reality of trading. I am showing you guys every single trade that I'm taking on my live trading account, and yes, there will be losses. I am not perfect. You are not perfect. Nobody is perfect, but people on YouTube, people on other apps like to lie to you and act if they're perfect, so I'm not doing that. I'm keeping it real. Keep in mind, guys, when I am targeting a 1 to 3 risk to reward ratio, I can lose 50% of my trades and still be profitable. My win rate is way higher than that. My win rate is around 65%, but my win rate could drop down to 50%. And because I'm targeting such a high risk to reward trade, I would still be profitable. That's the magic of the strategy. It's not about being perfect. It's just about knowing that these levels are so important that yes, sometimes they won't play out, but when they do, it'll give us a beautiful trade. I actually took a break and retest trade today. I took 2 trades and one of them was a break and retest. I'll explain the next one in the next segment of the video, but let's go over this break and retest real quick. Price had a very clean break to the downside, so it was very obvious that we were going to be looking for shorts off of a rejection of this midpoint, and we're going to target 15 points with a 5-point stop loss, looking for a 1 to 3 risk to reward. Let's hit play, and boom, that trade played out super quickly. I was only in that trade for like 15 minutes, and on that specific trade, I made around $7,000. Think about what's happening psychologically with the break and retest. Let's say price breaks below a key support level. Every trader who was long at that level is now in red. Their thesis is proven wrong. They're desperate to get out of their trade at break even. So what do the second that price comes back up to retest that level? They sell to cover their position. This selling pressure acts as fuel, pushing the price further down. Everybody who got into longs right here wanted to get out of their longs immediately, and then this fueled this move down. The same thing happens in reverse for a breakout to the upside, but shorts get trapped instead of longs. We are capitalizing on the pain and the emotions of trapped traders. Now, the second setup that I like to focus on is bounces or rejection of untested highs and lows from previous trading sessions. This is one of my favorite setups ever because it is so incredibly simple. Untested highs and lows from London, Asia, and New York trading session are magnets for price, and they give us really high probability setups anytime price approaches one of these key levels. Why does this happen? Because this is exactly where retail traders place their stop losses. So here's exactly how to trade this setup. The first thing you do is you identify an untested high or low from a previous trading session, which today, this was this New York low. Obviously, this level is now tested because price touched it, but when the market opened up, this level was very clean, and we were simply waiting for price to come to it. I'm going to show you guys exactly how I identify the sweeps. Right here, you can see that price had a big move down to this level. Whenever price has an aggressive move like this, I am always looking for a potential reversal. I will then go down to the 15-minute time frame, and if price is unable to close under this key level on the 15-minute time frame, as it was right here, I will take that as a sign that nobody is willing to sell for below this price. Like I said, the market is a constant auction, and right here, nobody was willing to sell for under 6,818. So that means every candlestick that we have above this level is showing us more and more strength. So what I did is I didn't enter immediately when price touched this level. I waited for a 15-minute candle closure above this level, and then I entered, and I was able to still catch an incredible entry, making me around $12,000 on that specific trade. A great way to think of highs and lows is almost like ping pong. It's almost like price is playing ping pong between a low and a high. And your job as a trader is simply to identify where the high is and then to catch that move back down, and also identify the low and catch the potential sweep of the low and the move back up. I'm gonna show you guys a great example of exactly how to do this. So right here, we have an untested Asia low. We also have an untested London high and an untested New York high, but the key thing to keep in mind is that price was breaking through these highs pretty quickly, right? So you can clearly see the price does not care about these highs at all. We had one candlestick where price broke through all these highs. But what you can see is that price is having an instant rejection to this high, meaning if we get a 15-minute candle closure under this high, or even a lower time frame candle closure under this high, like a 5-minute or even a 3-minute, you can enter shorts with a tight stop loss. My stop loss on this trade was exactly 10 points, and I targeted 30 points, and I was able to make $16,000 off of this trade. This is one of my biggest trades ever. You can see we instantly had that beautiful rejection, and if I held, I would have obviously made more money, but I am a scalper, guys. Remember, this is a scalping video. Our goal is to get in trades and get out of trades very fast so we can make our money and then go live our lives. Our goal is not to be sitting in front of the computer all day staring at price go up and down. Just like I talked about with the other example, the key thing here is to use timeframes in a smart way. If you really want to, you can even go down to the 1 minute time frame and you can say, okay, if price taps this level on the 1 minute time frame and is unable to close over it on any of the next 5 1-minute candlesticks, I am going to take shorts, and you still would have been able to get into that trade. The key thing with levels is we just want to identify their strength as early on as possible. Most people, they identify the level strength way too late. So that's why I like to go on the 1 minute and the 5 minute to observe exactly how price is reacting. And if price is having a strong reaction, I like to get in, catch that trade. So this strategy is super simple, it's profitable, but I'll be honest with you, there is one major flaw. I have to be in front of the computer to trade it. And that's where the problem started for me. I originally got into trading because I wanted freedom from my job, from a schedule, from somebody else telling me what to do. And yeah, trading gave me that. But over the past few months, I'm not gonna lie to you guys, I caught myself feeling like I just traded one job for another job. I was sitting in front of my computer all day long watching the president tweet, and that just didn't sit right with me. If you guys don't know, my godfather spent over 30 years at Goldman Sachs, and he told me the one thing he regretted most was time. He said, time is our most precious asset. We will never get more time, so spend it doing what you absolutely love. That really stuck with me because yes, I love trading and the freedom it can create, but what I love more is spending time with my family, spending time with my dogs, going on walks, and making sure I'm healthy. I did not enjoy being glued from my desk from 8 a.m. to 3 p.m. every single day just waiting for these setups. I was completely chained to my screen. I hated missing family events. I even missed a wedding that I really did not want to miss. And I hated not being able to travel. And more than anything, I hated that my entire life revolved around the market open. It just got repetitive and stressful. So I set out to build a better way, a way that would let me be 100% emotionless, so that I would never hesitate on entries or wonder, what if this is the one that fails? I needed to never cut my winners too early because I was scared to give some profits back, and I needed to never revenge trade after a loss trying to make it back. Even though I was profitable, I knew I was still, deep down, my own worst enemy. I remember one night I stayed up until 1:30 a.m. to trade one of the overnight sessions because there was something going on with the Chinese trade deal. I was exhausted. I was sleep deprived. I made some money, right? But my eyes were burning and I was just staring at the screen. Eventually, I literally fell asleep on my desk chair. And then a few hours later, I woke up, I looked at the chart, and I was like, this is not the way that I'm gonna do this thing. I realized that yes, I made money, but I was losing valuable time and valuable sleep. That was the moment that I realized I cannot do this forever. I already knew that the strategy worked. The data proved it, but I also knew that I was the weakest link in the system. I needed a way to completely remove myself from the equation. I needed a way to automate it. So that's exactly what I did. I hired a team of developers, and we spent the last 2.5 years building an algorithm that trades this exact liquidity strategy 100% automatically. We call it the RP Liquidity Bot. Right here, you can see that this trade was executed fully automatically. This is the entry. We entered right there at the low, and this is the exit. The bot goes ahead and actually draws out this little graph for us too, so we can visualize the risk to reward. So we can see that we were risking 12 points to make back 40 points, meaning we had around a 1-to-4 risk to reward ratio on that trade. Here's another automated trade that our algorithm took. You can see that we were risking 10 points to make back 40 points, giving us a 1-to-4 risk to reward ratio on that one. This bot does everything I just taught you, but it does it with the discipline of a machine. It trades 24/7. It catches the setups in the New York, London, and Asian session, so you never miss an opportunity. And the best part is it's 100% emotionless. It takes every valid setup without fear or hesitation. It holds winners to their targets without greed, and it takes small losses without getting upset. But we did not stop there. We realized that different traders have different goals, so we built a full suite of algorithms, each designed for a specific purpose. This algorithm is called the prop firm scalper. You can see that over the last 3,460 trades and over the last 5 years, it has a 79% win rate, and it's currently up around 177% over the last 5 years. This is personally my favorite bot because it's a high-frequency mean reversion bot designed with one goal: to systematically and safely pass prop firm challenges. Why is it a mean reversion bot? Because because markets spend most of their time in a range. Price moves away from its average, gets overextended, and then snaps back. This bot is designed to catch those quick, high probability snapback moves. It has an incredibly high win rate and a very low drawdown, which is exactly what you need to meet the profit targets without blowing your account. This bot is basically a sniper. Now let's go over some setups so you can see exactly what this bot is doing in real time. So right here, you can see that we're entering some shorts. We got out of the shorts, and then we entered some shorts, got out of the shorts, entered some shorts, got out of the shorts, some more shorts. And this is a super cool little segment. You guys can see we had like 5 winning trades in a row because we were able to short this pullback, we're able to short this pullback, short this pullback, short this pullback, and it played out every single time because that's what mean reversion does. Obviously, we will take losses, but I was just showing you guys a nice little winning streak. We had some more longs right here. We had some longs right here, and then we did have a small loss somewhere in there. I see stop loss, so that means we hit a loss. And then we actually took some more shorts right here. Remember, this is a scalping bot, so we are getting in and out of trades super quickly. And then recently, we actually just caught some beautiful shorts right there. We caught those shorts right at the high, all the way down to here. On that trade, we made $370 right there. And on this trade, we made $2,220, and then we made $370. And then obviously we will take a small loss, as you guys can see, from time to time. And obviously we will take a small loss from time to time. You guys can see right here, we have a small loss of $1,400 scattered throughout all of our wins. And then another small loss, $1,200, then $700, $300, and then $500 winner. Small loss, then a $3,000 win, right? So the key thing here is the data, right? The data does not lie. I am literally showing you guys a 5-year back test over 3,460 trades, and you can see that yes, sometimes we will go through small losing periods, but over 5 years, we are up 177% on a 100K account. Now, we also have a sophisticated trend following system that operates on higher timeframes. Why trend following? Because the biggest profits in the market come from catching the big moves. This bot is not a scalper. It's designed to be patient, ride the trend, and capture those massive winners. It has a lower win rate, but the winners are significantly larger than the losers. This is the bot to use if you're focused on compounding your capital over the long term. Now let's take a look at the results so you can see it for yourself. Real quick, let's go ahead and pull up a 5-year back test. So I'm gonna go ahead and type in 2020, 2025 right now, it's 5 years. Let's see the results. You can see that we have a 53% win rate, but the key thing here is that we are up a ton, right? We've taken 2,600 trades with a profit factor of 1.3. And what I want you guys to focus on is simply this line, right? The line and your P&L curve is the most important thing that you are tracking as a trader. All that other stuff is nonsense, right? Even if it wins today, if it loses today, that's cool. But what really matters is the stats over thousands and thousands of trades. I'm gonna show you guys a few setups real quick, just so you can understand exactly how this bot works. The blue arrow means that we are entering longs. So we entered some longs right there. We took profit right there. That trade made us $6,800. Entered longs there, out there, 2,400 off that one. And then we had a small loss right there for $890. And then we made $6,675. We longed that entire move up, which was beautiful. We made another $2,000 over here. And then we took some shorts for $2,000. Another small loss of $1,200 right in there. And then after that, we had a winner of $8,000, a loser of $675, and then a nice winner of $5,000. So you can obviously see that the winners are like this and the losses are like this. All right, guys, real quick, I'm now gonna go ahead and do a live broker login just to show you guys the profits from this week and from today. This is on a $300,000 Apex account, so let's go ahead and log in. Now I'm gonna show you guys the results from this bot over the last few weeks. You can see that we have won 60% of our trades and we have made $3,735. Our average winning trade is around $850. Our largest winning trade is $1,600 and our largest losing trade is only $492. So that means that our largest winning trade is literally 3 times bigger than our largest losing trades, which is amazing to see. The main thing here I want to highlight is the consistency, right? You guys can see that we started this account up $900, then we were up 900, then we took a small loss, and then we finished the month at around $3,700 in profit. Also, keep in mind, this is on the smallest risk. You guys can be copy trading with multiple accounts. You can be using more contracts. This is just what it looks like if you're using one contract. I use way more than one contract in my own manual trading, and I'm assuming that most of you all do too, so just keep that in mind. Here are the results for our other bot, the scalping bot. Keep in mind that this is just trading 1 micro, so this is taking really, really small trades. This bot is currently up $382 over the last few weeks. The trades that the algorithm takes will always be the same, but your exact profit and your exact loss will always depend on how many accounts you're using, how many contracts you're using, and whether you're trading micros or minis. So you have two paths. Path A is the 95% path. You can keep trying to do it all yourself. You can spend the next 3 to 5 years learning, blowing accounts, dealing with emotional stress, and hoping you eventually figure it out. Or you can choose path B, the 5% path, the path of the hedge funds and professional traders. You can get access to a suite of institutional grade algorithms that are based on decades of proven data. You can have them deployed in your account and running for you literally by this time tomorrow. So if you're ready to stop guessing and start operating like a real data-driven trading business, I want to invite you to book a call with my team. On this call, we are not going to try to sell you anything. We are going to look at your specific situation, your goals, and help you build a plan to get you from where you are now to being consistently profitable. We'll show you the systems, answer every single one of your questions, and we'll see if this is the right fit for you. And we back this up with a 100% performance guarantee. If the algorithms are not profitable for you in your first 90 days, we will give you a full refund on your license fee. We only want to work with traders who are winning, and we are so confident in our system that we're willing to take that risk. We don't work with just anybody, but there is a link in the description below so you can apply. Spots are extremely limited only because we do a full white glove onboarding for every single client that requires me and my team's time. So if you're serious, click the link and book your call now. I hope you guys enjoyed this video and got a ton of value from it. If you did, I'd greatly appreciate it if you guys could drop a like and subscribe, and I'll see you guys next week for a brand new video. Peace out.